growth requires more than capital.
Why do we call it the cheat code? Nobody said growth had to be fair.
Revenue solves everything.
Welcome to the cheat code. What was our fastest path to revenue?
We tend to like to do things the hard way.
What's the cheat code? It's giving yourself an unfair advantage over the others.
What is it that really works, and how are we going to grow these organizations?
That's our cheat code.
Hey, what's up? You are back again on the cheat code. I'm joined, of course, by my illustrious partner in crime, Mr. Josh Wagner. Josh, how are things over in the video game studio?
Doing great. We got we still don't have it plugged in, so it's hard to play without being plugged
that helps.
in, but we'll get there.
I find that helps. So we got a great guest today. I hate to do the tired phrase of requires no introduction, but it really doesn't. But I'll give a brief one anyway. So, currently co-founder of Stage 2 Capital, managing director over there, helping early stage organizations, seed and Series A organizations scale up, which is super relevant to his background because he was the founding CRO over at HubSpot, scaling them from really 0 to 100 million. Welcome, Mr. Mark Roberge, to the show.
Oh, you're kind, Justin. Thank you for that.
Yeah, appreciate you joining us. I know your time is valuable, so we'll hop right into it because I'm sure you have a ton of background and just insights on what is the focus of this season, which is partnerships and kind of folks' ultimate cheat codes there. And so we'll just get right into the nitty gritty. So, Mark, how would you term your ultimate partnership cheat code?
Yeah, it's an important topic. I'm glad you guys are spending time on this in the pod. I would say, especially for like the early stage founders, they go to it too early, and we can talk about why. And that's a huge mistake. It's actually a lot harder than most folks think, and we can talk about what it takes. And the last piece I'll do on the cheat is it's less about what you will take away from the partnership and a lot more about what the partner will gain from being with you. So that would be my cheat on the three things that I think founders and early go-to-market executives underestimate.
So let's kind of hop in order there. In terms of like the early focus on partnerships, I think, this is even more difficult these days because partnerships is having some kind of, revival spring in and of itself. And, there's a lot of technology focused in that area, which tends to kind of be the lead of any, bell curve of interest. A lot of surprisingly agencies popping up as well in terms of how to establish, run partnerships, devise a successful go-to-market program around that. And there, with all of that, there's what I've seen is, a huge groundswell and focus on, how do we do this and, how do we do it yesterday? So talk to me a little bit about, that notion of being too early. And, if you're a seed stage organization with, 500K plus in revenue, which is, where we tend to focus from an investment standpoint, like what does that maturity curve look like?
Yeah. And, just to unpack why it happens, I think what happens is a founder or early stage team will start to do some founder selling, accumulate dozens of customers, hundreds of thousands of revenue. And then it's like two options. Option A is hire a direct sales team, which sounds very expensive and scary, especially for a founder that's not done it before. Or be like, you know what? Look at that company, fill in the blank, Oracle, like Vistaprint, like any, whatever. They have thousands of salespeople. We're such a perfect complement to them. Why don't we just create a partner program and leverage that, right? And so that happens so often. And the first mistake and like revelation is at some point to make that successful, you're going to have to enable their sales team with how to sell and position your product. But you haven't done that work yourself yet. You know what I mean? Like, yeah, you as a founder have gone and told the story, but you haven't built your sales playbook yet. You don't know how to set appointments scalably. You don't know how to do discovery calls. You don't know how to do demos. You don't know how to close. You don't know how to onboard. You have to learn all that. And it is 10 times harder to learn that from a partner who doesn't work for you than it is just to hire 2 or 3 salespeople that sit next to you and you can iterate on an hourly basis. So even if like your vision is to ultimately scale through channel, I just think you have to go direct first. to build the go-to-market playbook.
I know we're talking about partnerships here, but you touched on something near and dear to my heart, which is the enablement piece. And why is it that you think that so many, especially early stage founders, just skip it? Like their perception of sales is I hire someone, they just start pounding the phones and revenue comes flowing.
Yeah, I think it's an if you build it, they will come mentality, Josh. And it's like, I'm very fortunate to work with dozens of founders a week. The student body at Harvard Business School that I teach and get exposed to are the founders, the product founders. And they usually catch them in the early stages of their career, 25, 26. And that is their mentality, is like, if I need good sales, I failed as a product person. But like when you talk to really great serial product founders, like I put up on the first day a quote from Peter Thiel, which is like one of the most successful product founders out there. And I don't remember exactly how it goes, but it's something like, it's very hard to create sustainable advantage through product, but it's much easier to create sustainable advantage through distribution. And so even something like that, I just see as product founders grow, they recognize you have to win both games, ultimately to scale.
Yeah, I think the interesting thing, not only the attraction of as you mentioned, hey, look at the audience that this organization has already captured. Let's just tap into that. But the thing I also find a lot of founders gravitating towards is even a step beyond that, which is resale. Let me give you another SKU to add to your bag and so on. And I mean, that just, it seems like that would just further compound this issue and is such a recipe for disaster if you don't have all of those building blocks that you mentioned. So is there kind of a crawl, walk, run to this, to where, how long do you have to be, directly in market? I know that's kind of a product market fit question, which is a difficult one to answer, but like, when do you know you're ready? When you can cross that chasm for kind of that co-selling motion? And then curious to get your take on the resale motion as well.
Yeah, sure, Justin. I get a pretty codified playbook on knowing when, and it doesn't really come, it's not like a customer count or a revenue count. It's essentially you have to have product market fit first, then direct go-to-market fit next. Okay, and I've written a lot about this in the science of scaling that, we use as our methodology at stage 2. It's something that I came up with even before stage 2. It's taught at many business schools. And what it's intended to do is help organizations calculate when they're ready to scale and how fast they can scale. And that's another way to kind of ask your question, Justin. And we can like recalibrate and like, when are we ready to set up a partner program? And so first you need product market fit. And it's crazy that we've come a long way as an ecosystem to know what, to say product market fit and focus on product market fit. When you ask 100 entrepreneurs, when are you ready to scale? They'll say product market fit. That's great. That's so much better than we were in the 90s. The problem where we are as an ecosystem is you ask those 100 entrepreneurs, what is product market fit? You get 100 different answers, and half of them are some sort of revenue number, like $1 million. And I just can't, I blatantly disagree. I just think qualitatively product market fit means that if you sign up, 50 customers in a quarter, then 90% of them will realize the value that you promised them. That's what it is. And so if I'm going to pick a metric to represent product market fit, it's customer retention in like the space that I think we all play in, mostly software, B2B software, SaaS, et cetera. And so that's a good metric. I think that's much better. I think if you have 90% plus logo retention, you have product market fit, not if you have $1 million or $5 million revenue. Now, the problem is in our early stage environment, you don't have a view on your long-term logo retention for like a year. So we can't wait that long. So we help organizations set up a leading indicator of retention as a way to measure product market fit. So at HubSpot, ours was if they used 5 or more features in the first month of the platform. Great. At Slack, it was if they send 2,000 team messages. Like that. These are great North Star metrics that like if 90% do it, you have product market fit, and if they don't, you don't. So you need that first, product market fit. And then you need to figure out go-to-market fit, which is what we were talking about a little earlier, which is, okay, you have product market fit. And all that means if you sign up 50 customers this quarter, like 45 of them are going to send 2,000 team messages or use 5 or more features, whatever your North Star is. It doesn't mean you can acquire them and deliver that scalably, like profitably. So that's what we have to figure out next. And that's what go-to-market fit is. And that's not like, oh, your GAAP accounting net income is profitable. No, that's not what we mean, because that talks about your office and your engineering team and all this stuff that isn't necessarily going to scale with revenue. So what we do is we usually isolate that to a term that most folks have heard, unit economics, right? So we've heard things like payback period and LTV to CAC. And so we have to achieve good unit economics to prove product market fit. Now, like, let's just say we're focused on like LTV to CAC and we want our LTV to CAC greater than 3. Like, philosophically, no one says this, but like when a salesperson joins your company and they're like, what is my ultimate job? Your ultimate job is to produce an LTV to CAC greater than 3. But like a 27-year-old account executive would be like, I don't know how to do that. So we do these things, these algebraic things to extract that back to how many calls is that a day? How many opportunities is that a week? What's the close rate? What's the ACV? What's the long-term churn of that customer base? Like, we extract it back and it becomes an algebraic formula to know if we have unit economics. So that's basically it. Is you have to do product market fit and go to market fit. I don't know if that happens at $500,000, $1 million, or $2 million, but we can calculate precisely where it's done. I like to see it done with at least 2 direct reps. And once you have that, then I think you can stand up the channel.
Well, I do think it has a lot to do with what value you're selling on the go-to-market side, right? Like, we see this all the time. Some founders are very clear in who they're selling to, what the problem is they're solving, and how they turn that problem into a value statement with their product versus just pitching a bunch of features. Then you have others where the message ping pongs because they're opportunistic and the product could solve this problem, could solve this problem, could solve this problem. And it just ping pongs and it creates confusion within the sales team, right? Because
you're totally right, Josh.
The founder's is opportunistic, right?
Yeah, they don't like that's, people are just shocked at that still. And this work has been proven all the way back to like Dale Carnegie's work 100 years ago on how to win friends and influence people. Like, this is stuff that the human race has known about it, but it's not passed on well from generation to generation. And that is that sales is not about show up and throw up. Sales is not about telling as many people as possible about what you do. That's what a lot of founders do. They build a sales deck and they give it to as many people as possible and they hope that someone buys. And we all know that that's bottom quartile selling. And thanks to like the recent evolutions of like Gone.io to actually give us highly scalable AI, analysis of sales calls, we know that's like one of the first things I show my students is I'm like, look at this chart. What does this chart say? And they're like, it says that the top third performing salespeople in the industry speak less than half the time on the first sales call. And that the worst third performing salespeople in the industry speak more than 75% on the sales call. And I'm like, so what the heck is going on? And they're like, they must be asking questions. And I'm like, about what? So like we start to get into it. And you're absolutely right, Josh, is like, to this day, founders are like one of the top 5% Java programmers in the industry, but they're the bottom 10% in terms of the basics of selling.
So is it fair to say that you disagree with this? You guys see this video that showed up on LinkedIn a couple of days ago with this yapping component that like all sales reps are the best yappers? Have you guys seen this?
I didn't really see that, but yeah, I would disagree with that. Like, yeah, I think the best.
I just disagree with the word yap.
Yeah, that's a funny one. Yeah, I mean, I think the fastest way to like help someone conceptualize what great selling looks like for someone who hasn't sold is like, they're almost like an amazing therapist. Like I really think therapists are like, without knowing it, they have mastered the art of selling. Because literally, like, you go into therapy and you're like, you have your issue, you're sad, you're depressed, you're unmotivated, whatever you have. You leave 45 minutes later and everything's changed. And all they asked you was 9 questions. That's it. That's like remarkable selling. That's what great salespeople know how to do.
I was going to say, yeah, I mean, the whole idea of taking a brain dump from somebody, which a lot of people don't know how to handle first and foremost, right? You get into that conversation and a prospect all of a sudden throws up at you. And then your next response is to pitch them versus distilling that down into what you heard into a very concise 2 to 3 points and then digging into those at another level. That's it, right? Like if you just do that 3 or 4 times, they're going to come up with the value of the solution on their own instead of you even saying the name of your product or what you do or any of these features. And it seems like to be a very challenging thing, especially for young sellers to do and founders to take that, because they're brilliant, right? Their product's brilliant. Just look at it. You're going to buy it.
Right. You're unpacking two great things, Josh, which is, first off, it's surprising to folks when they learn this, that like you actually want the buyer to know, as in my opinion, as little as possible about your product in the first meeting. Because like the minute you tell them anything, like, hey, like we're a cybersecurity company for like, well, blah, blah, blah. Now you've kind of set the stage on what they think you want them to be talking about. And what we want to talk about is what they think their biggest problems are, regardless of what we have. Right. And so that's kind of the first one. And a great way to do that is like, why'd you take this meeting? Like that's 70% of buyers, in my opinion, just go off and you're psyched. And the other point you're bringing up, Josh, is, so you say, why'd you take this meeting? And they go off for 2 minutes and they literally like explain the point of your business. And a founder is psyched and like, nice, this is great. And then they go into pitch mode. Right. And I'm like, no, you're almost like a poker player that just got aces. You know what I mean? You don't stand up like, yes, you like slow play it and you like work it for as much money as possible at the table. And now that they've just basically repeated your website to you, slow down, ask them why that's important, ask them when they need to solve it for, ask them who the decision maker is, figure out how they think about the budgeting. I mean, slow down. It's a good start, but we have a lot more work to do.
Totally. Well, and I think that's a really good segue to the second point, right, Justin? The second point is it's too hard to just jump into partnerships. So everything that you're wrapping around here gets into how hard it is not only to enable your own internal sales organization to go direct, but now translating that to somebody else's organization. So talk a little bit about that and your experiences with HubSpot or others.
Yeah, I'll talk about it within the context. I'll talk about within the context of HubSpot. And we had two different types of partnerships. We had like small SEO agencies, and I can talk about that piece. And then we had these large partnerships. Our first approach to that, and in a way we kind of fell into this trap that I'm talking about, is, well, we did build a direct team, but like we tried to set up a big partnership with, I don't remember who it was. It was something like a GoDaddy, like competitor, big company. And they were.
And why? What was the impetus for looking in that direction?
Because like we were targeting small businesses. And I remember at the time, like this was 20 years ago, the only software company that had successfully built a big business targeting small businesses was Intuit. And so like there was a lot of skepticism about whether we could do it. And what folks underestimated was the new distribution model that evolved during the movement to SaaS, where it's no longer about good looking, expensive sellers that knew how to golf and take someone to a steak dinner, to an MQ all off a website that went to like a 25-year-old inside account executive that was closing transactions like crazy over Zoom or the phone, And so we were actually ultimately able to pull it off. But that was the impetus, Justin, was like, hey, these web hosting companies have hundreds of thousands of folks. Why don't we just partner with them and give them 20%? And that's like a very typical mistake. And that just doesn't work. Like you don't get their mind share. And what you have to do is you have to look at it twofold. Your first milestone is you have to get as high up in the organization as possible, maybe the CEO level, and understand what their top 3 strategies are and ask yourself whether a partnership with you could address one of the strategies. That's step number 1. And once you have that, you're going to get the partnership signed likely. But you're not there yet, because step number 2 is now you have to picture being a 35-year-old seller at that company, and you have to motivate them to take your thing out of their bag and not the other stuff that they already know how to sell, because they worked really hard for that 30-minute meeting with that customer. And they have 50 things they can pull out of the bag, so why do they pull yours? So I can give you a really good example of that because we got it right when we partnered with Salesforce. So now, HubSpot's a competitor with Salesforce, but back in the day, we were in the marketing arena and they were only in the CRM arena. And it was really a good fit. And we found out, because we had, good relations with their executive team, that one of the things that was really frustrating Benioff was a lot of the customers would be like, it's cool, I like your CRM and it's in the cloud, I love all that, but my biggest problem is filling the CRM with leads. And he found that like his salespeople weren't great at like explaining how that would happen. And he was particularly impressed with how HubSpot was like gaining a lot of traction on this new way to like generate leads. So boom, we had it. Like we had the CEO alignment. And so then the second step is, okay, how do you get the mind share of the sellers?
I was just going to say, like, did you know that was an explicit problem when you approached Salesforce, or
Definitely.
did you find that out through? Okay.
Yeah, we had a dialogue with Salesforce, just like, you're friendly with the ecosystem. I think it was mostly George Hugh, who was like very trusted COO at the time. And he, in like probably a wine with Halligan disclosed it, and that's how this stuff works, right? So we knew we were there.
Yeah, I wanted to call that out because I think that's such a critical step that is always overlooked. Like, you need to understand that internal value prop, not just, the customer value prop, absolutely, but then that kind of precipitates into, like, what are those sellers struggling with on a daily basis that is going to create that top of mind awareness. So I think it's just so important that you brought that up.
Yeah. So that was like the C-level like motivation was like, hey, it was like a huge problem for him. And so now we had to immobilize and motivate the seller, right? So what he did, and this wasn't something we triggered, it was just happened to be what was going on. They were like, I don't know, 3,000 partners in their app marketplace, and he was like, those are all good. You can learn about those to a sales team, but there's only 10 that I'm going to, if you resell them, I'm going to count it as your quota, toward your quota. And one of them was HubSpot because he had this problem. So boom, you had that. So now it's like, okay, sweet. We have won over the CEO, and he put in place a motivating story for the sellers. Now you're not done, because even like Benioff gets off and says that at their sales kickoff, it still like doesn't stick. So what we do is I have to take one of our top sellers, Adam Mavrikos, and I'm like, you're now in charge. Your new quota. You're done in the direct funnel. You own the Salesforce relationship, and we're measuring your success on a quarterly basis on how much sales come through Salesforce. And so he was able to get his own desk in Salesforce Tower in San Francisco and Toronto. He had his own login to the Salesforce CRM, right? And he was on Chatter all day being like, hey, guess what? Like, someone sold this. Did you know you got 20? And he's flying around in New York and Atlanta and Dallas, and he's meeting these reps like, oh, I didn't even know we get credit for this. So he did it for 2 years. And after that, they were 10% of our revenue. And it was like legit. I mean, we were like 50 or 60 million. That was like 5 to 6 million. But that's a great story of what it takes. Not like, oh, we'll just give them 20% and start printing money.
It's so funny you say that. Justin and I are in the middle of writing a book right now called The Cheat Code, as you'd imagine. And I literally just finished that chapter called Walk the Halls, where I did the same thing at Marketo for like a 4-year span, where I just literally walked into their office, sat down, and had, running around talking to different people. It was the same thing.
That proximity
is amazing. Yeah.
And it's funny, Josh, because I think Marketo is one of the 10 too that got that program.
I'm sure they are.
Yeah, I mean, that proximity is just such an invaluable investment. And that, again, like to the earlier point, like, where do people go wrong in this exercise? It's just not investing at that altitude, at that level of just awareness and visibility. So critical. So Mark, you mentioned, like I would term that a strategic partnership, right? Like, is that, like a fundamental?
Yes, definitely. Large strategic partnership. Meaning, like, I think I know where you're going, which is like, you're going to be a very small part of their revenue and strategy, but they're going to be a big part of yours because they're just like exponentially bigger than you. Yeah.
And so how did you guys, I know you mentioned, you had a seller kind of embedded there, but like organization wide, like how did you kind of mobilize, or did you have a motion kind of across the organization to recognize those strategic partners and kind of execute a different level of plays versus, the SEO partners?
Yeah, I'm trying to think who else we like. That was the most meaningful one. I mean, we had a business development lead who ran a lot of that stuff. But I think like, it was really just like, how did you, once the lead was created via Salesforce, you like roped in sellers. And at that time, eventually it was like a territory game where you just roped in the one that was in the territory. Now, the other thing I think you're talking about, Justin, is the other partner program, which is a pretty good abstract example of the different types of partners, where I mentioned we had these agencies, right? And that was the exact opposite. Mm-hmm. They were like, what happened in the year 2 or 1 was Mike Volpe, our founding CMO, he did such a good job with lead gen. It was like, it made my job so easy. I mean, we were getting hundreds, thousands of leads every month. And what happened was about a third of them were these agencies where we'd call them and say, hey, go through discovery. And they're like, yeah, I don't actually want HubSpot myself. I have 50 clients.
Right.
And I want to learn inbound marketing and set them up on HubSpot and resell you guys. And I remember, so that would be like more of I don't know what you guys are calling that, but it's like more of fragmented where we're exponentially bigger than that, but we're going to have thousands of these. Right. And you see that a lot. Right. And so I remember all the reps, like I remember a direct rep would stumble across one of these and he'd be like, Mark, I'm going to make my quota in 1 week. He's like, I just met an agency. They have 50 customers. I'm going to make my annual quota. I'm getting them all. And none of them ever closed. And it wasn't until this guy, Pete Caputa, who I think was my 4th sales hire, he was really obsessed with them. Mm-hmm. And he convinced Brian and Dharmesh to let him try it. He was like annoying them. He's like, they're like, this is not going to scale. It doesn't make any sense. And he's like, just let me try. And they're like, fine, nights and weekends, you try. Right? And after a month, he had like 5 of them signed up and it was actually working. And so they're like, okay, cool. This is your new job. We're taking you out of the funnel and you do this full time. Let's see what you can produce. And he was producing like 50% more than the direct reps.
What did he?
But he had this. Well, what he did is he understood the agency, just like with the Benioff story, but at a different level, right? He wasn't like, oh, here's how the software works. And he was like, listen, he'd meet these website design shops and he'd be like, isn't it frustrating every month to try to find your next client? Like every month, it's like mouth to hand. It's like, yeah, exactly. How many $20,000 website projects can you do? Isn't it exhausting? And they're like, yeah. It's like, wouldn't it be great if every customer you signed up paid you $5,000 a month forever? They're like, oh my God, that would be so much better. And it's like, well, let me tell you about inbound marketing and how you package this up and why it would be better for your business. And then we had a whole channel team. We had a separate team of salespeople that joined. They weren't in the direct funnel. They got like these leads that were partners. And the first 6 months, they would build a foundation of 40 of these partners. And the rest of the time, they would never get leads. They would just have a weekly call or a monthly call with their partner and just find out what's going on. And we had a separate CSM team for those types of folks because it was complicated onboarding. You weren't onboarding a customer, you were onboarding a partner to resell. And then you had to onboard their customers potentially or help. So it was a totally different business in a way. So there's some definitely parallels, but you can see the differences with like the strategics versus the more fragmented partner.
It's hilarious, Mark. In 2011, Justin was a Marketo reseller before I started at LeadMD, and he sold me the same thing when I was running another company.
That's awesome.
He started sending me screenshots of lead scores and things through text message. And we reconnected on LinkedIn after a bunch of years, and it was hilarious. So he resold me Marketo in 2011 at a prior company, and then I wound up working for him after that. But it's the same exact story. It's so funny that you said that.
Yeah, those are the things. Those are the stories that give you a lot of conviction of like what you're advising the ecosystem on when smart people are coming to the same conclusions in different pockets of the ecosystem. So,
Mark, what was the ultimate kind of breakdown in terms of bookings, revenue that you're harvesting from those partner channels? Because I think services partners.
I can't speak to today. I know it's still a huge part, but at the IPO time, around 100 million, it was easier to go out at that time. Now it's hundreds of millions and just different macro climate right now. But like, it was about a third was from partners. So it was about a third through partners channel. The Salesforce one disintegrated because they actually invested in us in our Series D alongside Sequoia and Google. And that was pretty cool. But then like years later, they announced their own marketing cloud and it fizzled. And we announced our CRM, right? It was ultimately that we were going to go in that direction. So, but we had about a third falling in through those channel partners. I would say about, 50 to 60% was still in our direct team, mostly from like marketing generated leads. We're really good at that. And whatever the remainder is, 20% or so is from like purebred cold calling through like a BDR.
Yeah, I do think that, services/agency partner channel is just so overlooked. And I mean, HubSpot just did a masterful job at creating businesses that were, quite literally dependent on their business. So yeah, I mean, huge kudos there. So I mean, we could go around and ask questions on this for a number of hours, but I want to make sure that we get to horror stories here as well. Any great partnership horror stories to highlight for us? There's normally so many ways that a partnership can go sideways, but anything of interest there?
Well, there's kind of give you my big ones with like the failed start on that GoDaddy,
which is just such a great.
And also, like, I suppose, like, yeah, and I suppose, like, Salesforce got very like worrisome, because like it's like, when do you poke?
And that you see that as a big concern with a lot of founders. You know what I mean? Because there's in those early stages, I'll call it some logos without matching them to businesses like the Ubers and the Amazons of the world. Like, oh, this partnership kind of rears its head, and there's some really explicit value exchange, to be had there. But they can kind of flip a switch and knock you off the table pretty easily as well.
Yeah, I would say like probably even despite all that like proactive architecture of the programs, Justin, I would say like one of the big challenges that took us a while to figure out was aligning their approach with customer retention, right? Like that was always a challenge, even in our direct funnel, because like that was never a North Star metric in the on-prem software world.
Right.
Like you were kind of stuck with stuff. And that became the North Star metric, but it took all of us a long time to figure it out. And even when we figured it out for the direct business, you had to figure it out for the channel business too, and teach them. And I think, Pete would know better than I, but I think one of the biggest breakthroughs on that was most partner programs with that fragmented partner, they have like bronze, silver, and gold and platinum programs, where like you kind of start out and you're bronze, and then you have to hit certain metrics to get up to silver. And when you do that, you get like an advantage, like you get like a bigger cut, or you get better leads or whatever, bigger territory. And so historically, those had been set up around like how much revenue you created. But for us, it was around your customer retention and success. And I think that was a big breakthrough. It's like, oh, cool, I'm bronze. How do I get to silver? Or how do I get to, silver? And it's like, have a customer retention of 90%. Okay, cool.
Yeah, makes a ton of sense.
Yeah, and that really hammers home your third point. I know we talked about it quite a bit, but giving more to the partner, they've got to get more out of it than you expect back, right? And I think having those metrics front and center, and like you said, as much as you need to be present for maybe the sellers or the channel partners, whoever it is that's reselling you or co-selling with you, advertising those metrics and those wins as much as anything, right? Like how much did your company gain from this partnership, right? Well, why is it a win for you and not just for me?
Yeah, it was huge, Josh. And it's funny that, where most founders start is, I'll just give them 20%. And we did. We were very generous. We gave them 20% forever on the software. But I will tell you, we hypothesized for a long time that if we took that away, I don't think it would have affected things. That's not what they were in it for. Because they were getting 20% of like, what were they paying us? $300 a month. So they were getting $60 a month. Big deal. They were in it because they were getting $3,000 a month to write the people's blogs and everything. And they really looked the value of HubSpot as like evolving their business model to be a much better business model. So it's just like a beautiful example of like, dude, you got it wrong. This is like 20% cut is not going to make this.
Yeah, again, they're building their business on the back of this foundation that is just so hypercritical. So, Mark, I know we talked a lot about. I mean, you've got just a virtual shit ton of content out there that can be helpful for folks. So, just kind of break down, for the listeners where they can go to consume some of this stuff. There's the pod. You've got books out. Like, where can folks go to learn more on the stuff that we've talked about?
Yeah, I would just go to Stage 2 Capital. We have a resource center there and a very active blog. We focus, as Justin and Josh mentioned, like our differentiator as an investment firm is we're the first firm backed by go-to-market execs. So we have 600 CROs, CMOs from Snowflake and Zoom and Salesforce and Oracle and HubSpot and Datadog and all these amazing companies. We look to invest capital, which is relatively commoditized in the ecosystem, but help these folks scale their revenue. And so that's what we write about. You can go on there. There's chat.stage2.capital, which is our own chatbot that like absorbed all of our information. So if you have a quick question, you can try that out. My partner, Liz Christo, writes a weekly blog called Ask Stage 2 every Saturday. You can check that out. And then we co-produce a a podcast with HubSpot called The Science of Scaling that you can listen to as well. And I typically try to find the first sales leader at all these unicorns and hear that story. So you can check that out as well.
Awesome. Yeah. So Mark, I mean, again, very much appreciate you joining us here today. I think this was, incredibly insightful, and there's a lot more information folks can go consume as you mentioned. For everyone tuning in maybe for the first time or a repeat listener, go back and listen to Liz's episode. We've had her on the pod before. Great context around customer success and kind of the other side of the equation and go to market here. Give us a like, give us a subscribe. That's ultimately what keeps us going forward. Mark, again, thanks for joining us here today, and we'll see you guys all on the next episode of The Cheat Code.